A $1,000 starter crypto portfolio is the first video in an ongoing series titled the $100,000 Crypto Challenge. Looking at this chart, Bitcoin was easily the best performing asset of the last decade. Keep in mind this is not to scale. If it were, Amazon and Apple would appear as a flat line way down at the bottom of the screen. Will this continue to be the case though? In my opinion, Bitcoin and inflation at this point are about as sure of a thing there is outside of death and taxes. Those two are 100%. As for Bitcoin, regardless of when you are watching this video, I put the likelihood at around 98 to 99% that Bitcoin will be worth one order of magnitude higher in a decade than it is right now, otherwise known as a 10x. That is an incredible return when you consider that it took over 29 years for the Dow Jones to go 3,000 to 30,000 and the S&P 500 to reach 4,000. Up from 400. You may be asking yourself right about now, Crypto Minimalist, why would I need a portfolio at all? Shouldn't I just invest 100% of my money into Bitcoin? That is a great question, and if you already had substantial wealth, I would advise for you to do just that. But this portfolio is designed for an individual with a net worth of less than, say, $1 million. And the answer to your question is that we are still in the infancy stages of cryptocurrency. While I believe that over the next 10 years, Bitcoin is likely the best investment, in the short term, it is possible to outgain Bitcoin by including altcoins in your crypto portfolio. This is why I am putting together an optimal strategy for turning $1,000 into $100,000 with cryptocurrency. To help in building our portfolio, we will be utilizing a diversification strategy often employed by banks and fund managers known as modern portfolio theory. MPT was first introduced in 1952 by Nobel Prize-winning economist Harry Markowitz. It was designed as a mathematical framework for building a portfolio of assets so that the expected return is maximized for a given amount of risk. In other words, we are trying to balance the greatest levels of profit with the lowest levels of risk. For our purposes, we will be replacing bonds and stocks with Bitcoin and alts. On one end of the spectrum, we are 100% invested in Bitcoin, and on the other end, we may be 100% invested in high-risk meme coins. Here we have a similar model with the colored area representing many different combinations of cryptocurrencies. It resembles the head of a bullet or a plane. As we move up the model or parabola, our expected return increases. As we move to the right, our level of risk also increases. The prominent section of the model we will be focusing on is known as the efficient frontier. Every portfolio along the upper edge of the parabola or above the yellow line is considered efficient. It gives us the highest margin of profit for a given accepted level of risk. Whether you choose to take on very little risk or maximum risk, as long as your portfolio lies on the efficient frontier, it is not stupid, mathematically speaking. The maximization point represents the optimal portfolio that could be designed with a perfect balance between risk and return. Notice how the point lies just above where the nose of an airplane would be. So what kind of mix would be a maximization of our crypto portfolio? We have already discussed why Bitcoin needs to be the focal point of every portfolio. Now it is time to bring Ethereum into the equation. ETH is the second most important cryptocurrency in our portfolio. If Bitcoin is the dominant centralized store value, Ethereum is right now the dominant platform for building decentralized applications. Unlike younger projects, Ethereum has proven it can take knockout blows in a bear market and come back stronger than ever in the next bull run. The single most important reason we want to hold Ethereum alongside Bitcoin is that at certain points during a Bitcoin bear and bull cycle, altcoins, most notably Ethereum, do close the gap with Bitcoin. If we take a look at the Bitcoin dominance chart, we will notice that periodically the Bitcoin market cap falls sharply before eventually recovering. Going back to the last 3 4-year cycles in Bitcoin's history, you will see these drops. The largest drops coming during each of the last 2 cycles. Bitcoin fell from a dominance above 60% down to below 40%. The first coming in 2017, with another drop coming in 2018. In the current cycle, we experience an altcoin rally spearheaded by Ethereum in the spring. These rallies have all occurred in what is now commonly referred to as altcoin season. This is why it is key for us to add diversification to our crypto portfolio. Before we spend the rest of our time discussing various portfolio ratios, I need to point out that a deep explanation of the statistical data behind these ratios is beyond the scope of this video. What you should know is that the data has been gathered from the performance of Bitcoin, Ethereum, and a few other old altcoins during previous Bitcoin cycles. Then using standard deviation, we can predict future risk and reward. So, now that you know how important Ethereum is to your portfolio, we will have to find the right balance between Bitcoin and ETH. As we discussed earlier, this sweet spot is known as the maximization point. Applying the data, we see that the most optimal split is 75-25 in favor of Bitcoin. Keep in mind that this is not the perfect ratio, but a ratio optimally balanced between future gains and risk, considering what has happened in the past. Though the past does rhyme, it does not necessarily repeat. Let's look at what happens when we increase or decrease our Bitcoin holdings. The most Bitcoin one can hold while still maintaining a position on the efficient frontier is 90%. A 90-10 split is also a reflection point of the maximization point. Both positions are taking on the same amount of risk, however, the earning potential of the 75-25 split is greater. Remember how I mentioned earlier going all in on Bitcoin? What does that look like? Note how we are now below the efficient frontier. By foregoing even a small holding of Ethereum, you are taking on more risk for a lesser return. Not exactly what I would call a good deal. Yet Bitcoin maximalists will tell you that all altcoins are trash. Bitcoin maxis believe that holding any crypto other than Bitcoin will sooner or later lead to negative results. Historically, this has just simply not been the case.
Aww.
What about a portfolio residing in, say, the worst quadrant? One reason a portfolio will find itself here is it had too little Bitcoin. As long as you hold enough Bitcoin, it will provide some protection in volatile market conditions. What else can get you in trouble? Picking the wrong altcoins. I won't mention any names here, but it is very important to invest in quality projects that provide real-world use cases. Now, let us bring our attention back to the efficient frontier and experiment by decreasing the amount of Bitcoin we are holding. At this point, we are going to maintain our position on the efficient frontier as we begin to zero in on finding our $1,000 into $100,000 portfolio. For an even split between BTC and ETH, we would be increasing our risk tolerance while also having a better chance at outperforming a 100% Bitcoin strategy. Let's go ahead and try a little more risk. Notice how even though the risk is higher, we are still riding up along the efficient frontier. Once again, we are decreasing our Bitcoin percentage while increasing the Ethereum percentage. We have now completely flipped the maximization ratio. While at certain times in the cycle this would work out really well, I am starting to feel a little uncomfortable with lower and lower percentages of Bitcoin. I am not recommending this, but let's say that you want to try and shoot for the moon. I think that going all in with any altcoin other than Ethereum is pretty much gambling. If you were to go super heavy on Ethereum, I would point out there is a smidge of Bitcoin still in there. Going back to the 50-50 ratio, this is what I think makes the most sense for a new crypto investor starting off with $1,000. We need to be aggressive and at the same time give ourselves a high likelihood of success. We're going to go ahead and lock in our Bitcoin for $500. If you're new to crypto, or especially if you're a United States resident, I recommend using Coinbase for your original Bitcoin purchase. It is easy to sign up, user-friendly, and extremely simple to navigate their website or mobile app. As we head over to Coinbase to make our purchase, I will point out that in the description of this video, there is a safe link to Coinbase that will enable you to receive free Bitcoin. There are also additional bonuses and rewards down below if you would like to sign up for a different exchange or multiple ones. Now that you have your Bitcoin, we can go ahead and focus on the remaining half of our portfolio. If we shift our attention back up to the top of the efficient frontier, you'll recall that here reside the Ethereum dominant portfolios. However, there is still room to go higher up the efficient frontier. What could be up here? Well, that would be the dwelling place of the best performing coins and tokens of the current cycle. So, your Doge, Telcoin, Datafuel, Matic, things like that. But hindsight's 2020. We have no way of knowing who the biggest pumpers will be in the future. That is why, for now, we are going to stick with what is proven, Ethereum and other large market cap projects with high upside. This is the difference between keeping up with Bitcoin and gaining on Bitcoin. We've left the last half of our portfolio for altcoins, but we're not going to use it all up on Ethereum. Instead, we're going to go with 25%. We have now secured our Ethereum. But what else? We are going to split up the altcoin portion of our portfolio between Ethereum and the best of the rest. Unfortunately, I have run out of time in this video to talk about my other favorite altcoins. Don't worry though, there is a part 2 where I will share my top cryptocurrencies to buy in 2021 and to hold in the exciting times ahead of us. Don't agree with my beginner portfolio? Please share in the comments how you would go about building a portfolio if it was your first time.